Hi, everyone. So I'm going to do this sitting down and casual. Some of you know me. I'm co-founder, managing partner of Spice VC, one of the first tokenized funds. And just a little bit about the history and what's coming. So 2 years ago, we started a tokenized fund. When it was really new, there was not a lot of infrastructure or technology or regulation, understanding, and so on. About a year later, we started investing and building an ecosystem, and I think everybody here are part of this ecosystem now, which is amazing to see how it grew over a very, very short period. And here in Los Angeles, 6 months ago, I presented a concept for the next generation, for what a blockchain would look like if it was designed from the ground up for security tokens and for ownership. And today, 6 months later, I want to show you and talk about some of the progress that we've done towards this goal and how I think that this is part of a transition of this industry into what I call a fintech industry, or a scalable fintech industry, away from a blockchain industry or from a crypto industry and more towards the financial world. So when we're talking about security token, I think what we understood over the last few months is that it's all about institutional investors. The potential for digitization of securities is so big that this is not something that's going to come from the retail market. And STO started with retail because they came from ICOs, and ICO went to retail. ICOs went to crypto investors who want amazing returns in zero time, in like 2 days. This is not possible in security tokens. So if you want to reach scale in security token, it all goes through penetrating the institutional investors. And institutional investors are extremely risk averse. They have all their fiduciary duties, they have all their business models, they have what they're allowed to do and what they're not allowed to do, and they especially move slow. And they have an ecosystem that they're used to. So going into this ecosystem with the digital securities is very critical, and that's what Ownera, the platform I'm going to talk about today, is about. Now, how do you get to institutional investors? Now, in our industry, I see people with the slogan, long Bitcoin, short the bankers. So I'm all in for the first part, long Bitcoin, but short the bankers, I don't agree with that. I think that if we want to scale the digital securities industry, then long the bankers. The bankers needs to be at the heart of this revolution, because we're going after institutional investors, and the bankers are the ones that have the knowledge. They are regulated. They have the access to the biggest asset managers with the biggest assets. They have the distribution. They have the motive to go into a new market that's going to be tokenized and digitized. And I can tell you that I'm meeting banks, investment banks, over the last few months, and all of them know the digitization is coming. Some have projects that are more advanced. Some have projects that are less advanced. But the infrastructure is not there yet. And I think that as our industry starts to include these types of financial institutions, it's going to be better for everybody. And that's one of the things that we are doing. Now, I want to talk about where security tokens industry is now and where it needs to be in order to be institutional grade, institutional ready. And currently in the market, I see a problem with the way security tokens are handled. And again, this is something that came from the ICO days. So in the world of security tokens today, people separate between the token, which is a tradable thing, and the actual value or the definition of what the rights of the tokens are, which are mostly, in most cases, completely off-chain. So it will be on somebody's website, it will be some documents that people put on their website, but it's not immutable. It's not on the channel, and very basic information is missing and very, very hard to find in many cases. In some security tokens in the market, you practically have to be a detective to find out what are the rights that you're going to get. And there's no connection. And this leads to a problem that I call the Brooklyn Bridge problem. I call it Brooklyn Bridge problem because this is an example I gave so many times. And I ended up actually going to a blockchain called Ravencoin. I don't know, some of you might know Ravencoin. It's a blockchain that talks about being a blockchain for a security token, but it's completely anonymous, and anybody can create any token that they want and sell it to anybody that they want. So I went on Ravencoin, and I'm now the owner of the Brooklyn Bridge token on Ravencoin. And I can sell the Brooklyn Bridge token to anybody here in the room, and you're going to get the tokens, but you're not going to be owning the Brooklyn Bridge. Now, the problem is that the miners on Ethereum and Ravencoin and other platforms like that, they're not incentivized to look outside the blockchain. They only look inside the blockchain. They're happy. The tokens moved from one hand to the other. Okay? They're happy. Everybody's happy. But it doesn't mean that the value actually moved. And this is a problem because in a scenario like that, any issuer can say whatever they want. And my fear is that this is not scalable. It creates a situation where people can be not accurate. Some people can cheat. And in game theory, it's very clear. If you have a market which needs trust, if you have a situation where some people can start cheat, the whole market is starting to lose trust and to collapse. We've seen it with the ICOs. It's not only the people who were cheating in ICOs, it's the people that were not cheating, they were forced to exaggerate and to oversell. And the whole market got out of its natural position and basically died away. And we don't want that to happen to security tokens. So solving the connection between the token and the real live asset and the value is very important. So the project that I'm developing and working on to solve this problem started as a concept for the industry that I presented, as I said, 6 months ago here. And the idea is to create a public blockchain network which is optimized for managing eventually trillions of dollars worth of assets. And it is squarely aimed at institutional investors in the beginning, although it can scale to the public as well, going down the line. In order to make it institutional ready, we built it on top of a platform called Hyperledger Fabric. Now, Hyperledger Fabric is supported by IBM, Amazon AWS, Google, Microsoft. It's an institutional-ready platform. When you go to banks today, they will not launch on Ethereum, and they will definitely not launch on Ravencoin or platforms like that. So they need a platform that they trust. And Hyperledger Fabric is such a platform. It's a code. It's not a network. So we're building a network from this code, but we're making it public. A lot of you who know Hyperledger think that it's only for private networks, but it's not. It's built for private networks, but we're using it as a public. So we're building a public network out of a Hyperledger Fabric. It has all the bells and whistles of security tokens, all the things that we built over the years. Hard labor was to actually build them. Things like privacy, regulation enforcement, instant settlement, connection to fiat, liquidity infrastructure. All of this is going to be out of the box at the base layer, so you can start building application on top of it without having to worry about any of it. And it's a network only. So anybody here in the room that builds applications and help people tokenize and so on, Ownera is not in competition with you. It will just slot in instead of Ethereum at the bottom and just give you much better tools and make you institutional grade almost by definition. Now, how do we solve the Brooklyn Bridge problem? On Ownera, tokens carry their verified value with them. It's called KYA. I'll describe it in a second. But what it means is that unlike the situation today where information is missing, and people are buying primary from the issuer, they can ask the issuer whatever they want. But after the token starts moving hand, if there's no information, the token is worthless. And that's why, that's one of the reasons that liquidity is difficult. On Ownera, every token that moves around, you can go to the token and see the value that you get from the token on the chain, immutable, and it's just there. It's similar to buying a Bitcoin. The value is embedded in the token itself. And there are 3 layers to making it happen. The first layer is what I call KYA. KYA is know your asset. It's the equivalent of KYC for people. KYC is basically what gives the identity to people. KYA is what gives the identity to assets. And it's basically a very simple folder that includes all the documents that are related to the asset and to the rights of the token's holders in the asset. So by clicking the button of the KYA, you just get everything that you need to know wherever you're buying the token. It could be a 10th hand in a 10th exchange, Saturday night in a remote country. You just click the KYA and all the documents that you need to see what you're buying out there. Now, it is immutable. Nobody could have changed or touched it. It's legally binding. So all the documents there are signed, and you can go to court with them and claim your rights if you have to. And it's an integral part of the token itself. So KYA is something that is very critical to Ownera, because this is where information parity is going to be done. Everybody's going to have the same information, and it's also going to be updated with disclosure. Now, this is not enough, because I ask you a question. Can you do your own KYC? Can you go out and say, I'm not a thief? You can't do that. You need trusted entities to say that your KYC is good. Same thing for KYA. If we let the issuers just write their own KYA, we're going to be back in the same problem. So on Ownera, we have what we call underwriting nodes. Those underwriting nodes, they run the platform. They're equivalent to nodes in Ethereum and nodes on Bitcoin and other, but their job is different. They verify the truth, not just of the transaction, but also the truth of the token itself in the real world. So it works like this. If you're an issuer and you want to go live on Ownera, you find an underwriting node. Together you do the KYA, the underwriting node, which could be a bank, it could be a broker-dealer, it could be any other company that specializes in that. They look at the KYA, they approve it, they stake their reputation to it, okay? And they put it on Ownera. So when you go on Ownera and you look at a token, first of all, you can see everything about it through the KYA, and second, you can see who's the underwriter that staked their reputation to the truth of what you're seeing in the KYA. Those underwriters are really the new miners. They verify the truth of real-world assets. And then the third layer, obviously, is that they can now turn around, and because they stake their reputation to these assets, they can start selling them to their investors. So you can think of big investment banks, broker-dealers, other players in the industry becoming nodes on Ownera and being in a position to just take assets and bring them to Ownera very, very quickly. And I'm going to skip, I have 1 minute left, so I'm going to skip to the final slide, which is to say that I made it look very, very simple, but obviously there's a lot that needs to be developed here. And you can see the presentation later, but things like there's a registration app store, so registration is built in, privacy is built in. There's a proof of ownership model that proves that the KYA is real and was signed by the real nodes, and so on. And all of this is just a network. Now, this has gone beyond the concept. This is now at a stage where it's being built. We have a team, and tomorrow I'm hoping to do a demonstration on the big stage of a live demo of Ownera, where you can see the test version of what it looks like for an asset to have KYA, for a user to have KYC on the platform, a primary node to approve it, and for a token to move from one user to another with the KYA embedded in it. So I invite you guys to see the presentation tomorrow, because then that's when we're going to show the demo as well. What I want from one of the reasons why I'm presenting here is that I think that people in this room, you guys, are going to be the users of a platform like that. Today, you're users of platforms like Ethereum. And I see the industry, especially those that want to move into institutional investor space, coming on board, becoming nodes on the platform, starting to bring issuers on board and so on. And we're already starting to take nodes on right now. So come and talk to me if you're interested. That's it. Thank you.